Hi everyone. The non-farm payrolls report published last Friday is still impacting stock markets. During the Asian session, the US stock futures were declining while stocks in Australia and Japan were growing. What trend prevails today? Which events and reports are influencing currency movements? Watch our video review and find out. Let's start. Last Friday, the US unveiled its NFP report, which turned out to be rather controversial. There was a significant increase in new jobs and wages in October. This is a solid argument for the Fed to hike rates further. However, unemployment also rose. This might be a sign of a recession. This is why the regulator may also consider a softer stance. Given the fact that the Fed's top priority is to tame inflation, it is likely to pay more attention to inflation data, which is due on Thursday. The central bank is strongly committed to pushing inflation to 2% target. According to CPI data published last month, the consumer price index totaled 8.2%. The core CPI, which excludes fuel and food prices, surged to 6.6%. After Jerome Powell stated that the key rate could be even higher than anticipated, expectations of a dovish stance lowered. The main scenario remains hawkish. President of the Richmond Fed, Thomas Barkin, also said that the Fed may raise rates above 5%. We need to get inflation down to the target level. It's entirely conceivable to me we would end up over 5%, Barkin pointed out. President of the Boston Fed, Susan Collins, also did not rule out another 75 basis point hike in December. However, she also hinted that there could be a slowdown in aggressive tightening. I think all the options should be on the table in December, including 75 and certainly 25. We still have a ways to go, she stressed. Fed Governor Lael Brainard said that the present macroclimate may trigger financial shocks. She also noted that the economic outlook remains weak and market uncertainty prevails. Judging by the market reaction, investors are trying to find at least some reasons for optimism, so they are largely focused on the growing unemployment rate. This indicator, as we have already mentioned, increases the likelihood of a dovish scenario. According to the FEDWATCH tool, the chance of a 75 basis point rate hike at the December meeting stands at 43%. The US dollar's rally is subdued due to a strong NFP report and the Fed's hawkish stance. In the Asian session, the US dollar index was trading with moderate gains. It was fluctuating in the intraday range of 110.72, 111.27. The greenback was also up amid news from China after the announcement that Beijing tightened coronavirus restrictions. Hopes for an early reopening of the world's second-largest economy faded. The rally of risk assets also stopped. For this reason, the US dollar consolidated at 110.7. If it drops below 109.53, it is likely to decrease to 109.35 and 107.68. Alternatively, if it climbs above the resistance level of 113.88, bulls may push it to 114.76 and 115.32. The yen kicked off the new week on a relatively positive note. The dollar-yen pair was hovering at 146.7 at the start of the Asian session. Shortly after, the quotes rose sharply to 147. Analysts note that the bullish trend remains relevant for the pair amid the divergence of monetary policies of the Fed and the Bank of Japan. It fuels the US dollar's rally, limiting the upward movement of the pair. The yen could regain momentum only amid the Bank of Japan's interventions or the weakness of the US dollar. It means that currently there are no positive fundamental factors. The pair is trading on Monday in the price corridor of 146.64, 147.57. The Aussie has also lost steam today after a rapid rally last week. It climbed by almost 3% following rumors that China could ease coronavirus restrictions. Over the weekend, the Chinese authorities stated that they would adhere to the zero COVID policy. Commodity currencies went down as hopes for reopening faded. Moreover, any rebound of the Australian currency is likely to be short-lived given that China sticks to a strict COVID policy. After the weekend, the Aussie dropped to 0.641 and then grew to 0.645 several times. In the Asian session, the Australian-American dollar pair was moving in the range of 0.6406, 0.6472. The outlook remains bearish. If the pair consolidates above 0.6397, its further rise to 0.6466 and 0.6492 looks likely. The pivot level will be a high of 0.6522. If the price declines below 0.6397, it will signal a bearish trend. Should the pair slide below this level, it may decrease to 0.6346 and 0.6272. That's all for now. This week is going to be quite eventful. Inflation data is on tap on Thursday. Apart from the economic reports, market sentiment may be affected by the US midterm elections. Subscribe to our channel and keep close tabs on the latest market developments. See you.